We know it's coming. Don't avoid it. Don't bury your head in the sand because somebody will come and kick you up the arse. And it will be the tax man touching you inappropriately. I just want to pre-frame this. We're going to set it up with the 3 T's. The 3 what? The 3 T's. We've got GST, income tax, payroll tax, and then we've got a bonus, which is a super tax, right? And then we've got our costs of goods sold. This is the stuff that we actually use. So if you're in business as a builder, this is the materials that it takes to build it. If you've got a services business, it might be the legal services that you need to contract in order to be able to provide the services to other clients. And then we've got our fixed expenses. Our fixed expenses are to keep the lights on, right? I just want you to know those key areas and then the war chest. Because now we're going to go into numbers. Are you pumped to get into numbers? So, how many bank accounts did we have personally? How many bank accounts are we going to have in business? Minimum of 3. Minimum of 3. The war chest is over and on top. The reason why we do this, sales come in, they come into the trading account. We've got to pay for costs of goods sold, we've got to pay to keep the lights on, we've got to pay for tax and super, right? Remember the 3 T's? So many times I hear it, people, their trading accounts get massive because business is actually going really, really well. But what they can't do is they can't do the computational math in their head to know how much tax, how much fixed costs, and how much the cost of goods sold are. When businesses are expanding, they're spending a huge amount of additional funds on additional resources. So unless you're starting to plan for this by having the 3 accounts, we've got the terms account. The terms account is there to pay for the stuff that produces your goods, right? That pays for the stuff that produces your goods. We pre-allocate to that. The tax account, that pays for your GST, your super, your payroll taxes, and your PAYG income tax. We pre-allocate it, and the trading account will oscillate. And then ultimately you siphon off some profit into the war chest. The profit is the number down the bottom, right? Because what does a profit and loss not have on it? It doesn't have tax. What else doesn't have it on it? It doesn't have capital expenses to loans. So when people say they can't, when we say you can't eat profit, that's what we mean. Because the profit line on the bottom of most profit and losses, not like this one, but the profit line on the bottom of most profit and losses doesn't take into consideration the tax that you need to pay or the capital amounts that you're paying back on loans. And sometimes that's when you look at your bank account and you can't see any money in there. That's the thing. That's the reason, because you haven't paid for your tax. The profit and loss goes, yeah, baby, killing it. After tax, under. You're on credit. Segregate money into the tax account. So when the tax bills come along, because who's had it before, that red and orange and pink slip comes along and just kicks you in the guts? Why? It happens every quarter. We've got to get into a routine of planning. There's small habits. We know it's coming. Don't avoid it. Don't bury your head in the sand because somebody will come and kick you up the arse. And it'll be the tax man touching you inappropriately. This is an example. This is actually a real example. So I'm going to run through the numbers reasonably quickly here, but we've got sales up the top line. So 350, it's in thousands. So 350,000, 400 the next month, 450,000, 550,000, 600,000. Who'd love to have an income stream that goes like that? So costs of goods sold, 200,000, and you can see that line. That's the materials that we have to pay for. Then the overhead, 70,000. So net profit, 80,000, then 102,000, then 124,000, then 145,000. Who'd love a net profit like that? Yeah, you'd think so, but let's bring life into it. Sales is on 2 months credit. Stock purchase is on 1 month credit, and the overhead expenses are paid when they're due. First stock is for 2 months. Now let's have a look at the numbers. Do you reckon they're going to be a bit different? What ends up happening? First month, right? You've got sales on credit. You've got nothing, right? $70,000 out of pocket. Second month, you've still got no sales credit from the first sales because you're giving it on credit terms to your customer. You're now $498,000 in the hole. All of a sudden, does this change the dynamics of the business? This is how business operates. And by the way, scaling businesses, how much do you need here? Isn't in your war chest. Well, you need 3 months, but you just need a minimum of $500,000 just to get through this period of time. But your business looks good on the profit and loss. Right? And the problem is, guys, when you go to scale a business, this happens. If you double, this happens. Those stock purchases come online. I've had so many businesses. Thankfully, we've probably saved about 80% of them. Come to us too late when they're scaling, like the company I spoke to you about before. They're flying. They're successful. They've just f***ed up their financial management. Scaling businesses burn cash. You've got to know your numbers. You've got to plan for fixed expenses, plan for profit, design a budget, and then automate your banking so this stuff happens automatically, and build a war chest. It may save your life. Set up budgets based on your actual numbers. Review them monthly in columns. Are we going to do that?